trade.
Hello and welcome to this week's episode of Crack the Code, a show that aims to make you an informed and smart investor. I'm your host, Sumera Abdi, and in today's episode, we take a close look at the banking sector.
The Indian banking sector has come a long way since the country's independence. The industry, whose essential characteristics for decades was low profitability, weak capital base, and poor asset quality, has today grown into a vibrant sector with improved assets and a strong capital base. It's been an expansion nothing short of phenomenal. The credit takeoff has risen from a paltry 3,729 crore rupees in 1969 to over 75 lakh crore rupees as of March 2016. At the same time, deposits have grown to 96.6 lakh crore rupees from 5,173 crore rupees. This huge development has been made possible by embracing technology on a large scale. This has also increased customer convenience. Tap, click and swipe are the new sounds of money. And with the implementation of the unified payment interface, India's banking sector is on the verge of transformational change.
Alright, so we're on the verge of new and exciting changes which are influencing the sector's performance on the stock market. I have with me Mehta of ICICI Securities and Sanjay of Citrus Advisors to talk about what to look out for. Gentlemen, thanks so much for joining in. And Sanjay, my first question is to you because you've been dealing with retail investors for so long, right? So since the BSE BankX was launched way back in 2003, we've seen it give a return of over 14%, right? As opposed to the Sensex, which has just given 8% returns. I know it's a proxy on the economy, but what is it that's driving investors to these stocks?
I think the stock markets have to a large extent reflected what is happening to the broader economy. At the same time, if you look at whatever is happening to the banking sector, I think it has undergone a rapid transformation also over the same period when the domination of the private sector banks in the retail space has become bigger and bigger. And these banks have exhibited many things apart from the fact that they have shown how to manage a balance sheet and deliver profits. They've also shown how is it that you can leverage on a franchise of branches and deliver a profit which is much bigger than what many of the traditional PSU banks have been able to do. So I think investors got an opportunity to participate in this I will say transformation of a sector which was magical in many ways. And I think that is precisely what explains the strong returns that they have got from the BankX.
Mridul, to you on the banking sector at large, right? There have been a lot of opportunities. A lot of opportunities are yet open. There's a Jan Dhan Yojana for one, right? I know 28% of the accounts open there are still dormant. But how does one look at what the future of banking could be in the next few years? If a value investor were to buy today, what should he focus on over the next 10-20 years?
Traditionally, you just had the banks that you invested in. In the BFSI sector today, you have entirely new generation of banks, the small finance banks, which are now coming to the market. Two of them went public, Equitas and Ujjivan, and both of them have given more than 50% returns post their listing. You have NBFCs which have grown to be of reasonable size. A lot of NBFCs are bigger than some of the smaller private sector banks, the older private sector banks. And you'll have soon insurance companies and all of them getting listed. So just from a choice of investment from investors, it has opened up entire new avenues of opportunities.
Yeah, that's true actually. So as opposed to my father who could only choose banking stocks, I can now choose anything from this BFSI sector, right? But the dynamics there are also different. We'll come to that in a bit. But before that, Sanjay, for a bank, how do you actually select a banking stock, right? I mean, would I look at price to book specifically because I'm looking at banking stocks? What are the other parameters or ratios or fundamentals that I should be looking at specifically for banking stocks?
I would say let's put the financial of the banks in 4 quadrants. You have the assets on one side, the liabilities on the other. You have the profits on one side and the losses on the other. So let's convert profit and losses into cost versus revenue. So each of these quadrants have factors that you should be looking at when you select a bank stock. So when you look at the asset side, you should look at what is the composition of the loans that the bank has extended. Is it too much commercial, or is it equally a good proportion of retail? In the background of whatever is happening to the PSU versus private banking space over the last 2 years, you will now realize that this aspect also has a meaningful interpretation in terms of how you pick up a banking stock. The first quadrant, which is the asset quadrant, is one of the more important factors for you to look at, because from that is the other thing that we now draw as a factor for analyzing bank, which is the proportion of the non-performing asset. How much is it the gross non-performing asset, and how much is it that we have to provide for going forward. So that's the first quadrant. Look at the liability side. It is an equally important factor. You may have heard of this term called CASA. What is the proportion of the current account and savings account in your liability portion? Now look at the last two quadrants, which is the cost versus the revenue. Where are you driving your revenue from is an important factor. Traditionally, banks are seen to be an institution which is only engaged in the business of lending. Today, banks are much more integrated. They also now have a fairly large book of products that they sell. So how much of this fee income that is coming to the bank is also an important part of the revenue side of the banks. Then you need to look at the cost aspect. What is the cost to income ratio of a bank? You will find that many of the PSU banks today are saddled with higher cost to income ratio vis-a-vis the private sector banks. So all these four quadrants have important factors that you need to look at. These are, I will say, the fundamental or the theoretical parameters on which you should look at banks, and then you should temper this with the more practical aspect, which is to take a prospective view as to how are these four quadrants going to move in the next few quarters, in the next few years for a bank, and then take a view, and that will explain to you why some banks are trading at 4 times price to book value and why some of them are trading at half the price to book value.
Mridul, because we're discussing banking, we can't leave out the macros, right? How much of the Indian and the global macros actually affect banking stocks, and even in the BFSI space, how vulnerable are they to the current situation?
So if you look at Indian banks and what has the way they are trading today, there's a fairly wide diversity. So you have a lot of the PSU banks which are trading at less than 1 price to book. The return on equities is fairly low. While on the other hand, you have the private sector banks which are fairly high valued or richly valued in a lot of cases. So this is really a reflection of the Indian economy, where a lot of the focus of a lot of the PSU banks was on the wholesale sector, and commercial banking, the corporate sector has seen a lot of stress. This stress has been partly due to worldwide factors where a lot of investments are not happening. The business has been stagnant. The top lines are not increasing. Bottom lines increasing to some extent because the costs are being contained. So the pain that one has seen in the recent past is a combination of the slowdown that one has seen on the corporate sector on the domestic side, as well as you can't rule out the fact on the international also, the fall in price of commodities which has happened, and that has so it's really a combination of domestic as well as international factors which contributes to either the pain or the growth in the banking sector.
Sanjay, given the way things have stacked up now, would you rule out investment in PSU banks entirely at the current moment? I mean, would you wholeheartedly favor private banks, or is there any scope for an investor to find good buying opportunities in the PSU space?
So I would say that it would be a function of your risk appetite. There are some investors who would like to play safe and for them probably the private sector banks would be the best place to park their money if they have to park it within the banking sector. But look at where the pain for the PSU banks came from. Largely it came from the fact that with the downturn of the commodity cycle, the roadblocks on the infrastructure sector, and some of the pain that came from the electricity and the power distribution sector were the significant reasons why the PSU banks went into a very bad phase where the NPAs accumulated in a very significant way. There are banks in the public sector which are seen to be the benchmark for processes. Okay, and there will be some of the other smaller PSU banks which may not have had such good processes, and their management may not have been capable of dealing with risk. Investment is not about only retrospective review. It is about taking a prospective view also. So today, what do I see before me? I see that over the last few months, the commodity cycle actually has started reversing. If I look at what is happening on the infrastructure space, a lot of roadblocks which were there in the infrastructure sector are now getting removed one by one. If it is not showing already in the fortunes of the banks, it is surely showing in the order books of the infrastructure companies and in their execution capability. If I look at what is happening in the power sector, I think Uday was one step that has been taken by the government, but there are many other steps that have been taken by the government to remove whatever was, I would say, the shortfalls in the power sector. As we go forward, one of the things that we have to take for granted that if the market is going to go up, it is going to go up because the macroeconomic situation in India is also going to improve. So how can it be that the macroeconomic environment will improve, and it will improve only for the GDP statistics and not for companies which are operating at the ground level? So if these companies also are going to be beneficiaries of a better macroeconomic environment, if I had the past which was made up of write-downs, can I not have a future which can also have an element of write-backs? So if that be the perspective, I think I'm a little more bullish on PSU banks than rest of the market.
Wow, one can only hope that your cheer rubs off on the market as well. Okay, so there's so much being said about the future, but is there anything that the old banks have on the newer ones? I mean, is there any point of strength that they still possess?
So what one has seen is that the business models of banks are changing. You had the old private sector banks which traditionally offered all the products, but they used to focus more on a geographical area. But the newer banks that one has realized, and either the small finance banks which are now come to being, which are more focused for financial inclusion. But even among the newer private sector banks, say an RBL, it's focused on certain sectors like microfinance, like SME, like technology. And therefore, the sort of growth that one has seen and the investor preference towards banks which are more focused on specific subsectors rather than the entire banking sector. Investors are looking at certain strengths of banks. What, as a bank, can you position yourself? What is the niche that you are, and what's your strength? That is something which is actually one is seeing as a distinguishing feature for banks.
Mridul, since we've spoken about, at least Sanjay is of the view that things could be getting better. But there are still pain points, right, that still exist. You've been a banker for so long. Tell us, when there is a large NPA account for a bank, right? I mean, is it really all that evil as it's made out to be? Is it really that detrimental for my investment if I have holdings in that bank?
I think one should look at a bad account in the context of what has happened in the past, but also in the context of what a regulator is doing to set right skews that one has seen in the asset book of banks. So what an RBI has done over the last few years is put together certain guidelines through which one can actually restructure these assets. So you have a joint lenders forum, an SDR, a CDR, JLF and a CDR which was there earlier, and a SDR and an S4A which they have put in place. What this is essentially doing is recognizing that there have been temporary pain points in certain types of assets, let's give them some time. Let's restructure the debt to make it more sustainable. Otherwise, there's nothing wrong with these assets. So these enabling frameworks, whether they be in a road project where there is a temporary dip in traffic, or there's been non-availability of fuel in sort of power projects, or non-payment of dues by the electricity boards and rectifying that through the Uday scheme. So all these are enabling frameworks that both the government and the RBI has done to even out the stresses in the asset book of the banks.
Sanjay, since you're feeling so optimistic, let's talk to you about the future. RBL Bank saw phenomenal response, yes, in its IPO. Do you see a lot more IPOs coming up? What's the way for these, the newer banks in the future? There's a lot of consolidation happening. There's the SBI consolidation that's underway. How does an investor read into all of this?
So I would say that a couple of trends are very likely to emerge in the banking sector. Given the fact that a larger part of the country still is unbanked, I think there is surely a scope for newer and a larger number of banks to come into play. Mridul made a mention of two of them which got listed.
Yeah.
They are actually providing banking to an earlier unbanked space. And there will be many such entities which will be coming into play, which will offer the banking access to the large population of India. You made mention of Jan Dhan. That is also one of the projects. But that project has to be executed at the ground level by some institutional entity. So that is one trend that I see happening. Second trend that I see happening is that many of these banks which are now coming into play, they can't go back to the traditional banking model and expect to be profitable in the near future. So the next big thing that I think which is likely to happen in the banking sector would be the adoption of a lot of digital technology to enhance the value in all those four quadrants. So I think that is going to be happening. I think one of the banks, I think IDFC, has put technology as the front end of their rollout model. So this is the other trend that I see happening. Third, which you mentioned, consolidation. I think that is inevitable, because if we have to accept the fact that the traditional banking model is going to be under pressure because of the new emerging realities of the country. So what is happening in the case of SBI is not just an attempt to create a large bank. It is also an attempt to consolidate the resources of a large financial institution and leverage on that to provide a much more competitive offering to the customer, whether that be corporate or that be retail. Last but not the least, because the last couple of years has been very harsh in terms of punishing those entities which have not managed their risk properly. I think that has brought the spotlight on the importance of managing risk for banks, and that is equally applicable to public sector as well as to private sector. I think the attempt to manage risk is going to be something that will be a focal point of any banking strategy. And here I think the Reserve Bank of India has probably done the first thing by forcing AQR on the banks.
Okay, to wrap it up then, Mridul, any words from the Vice for value investors out there?
So I think what investors need to look at is not just stocks which look undervalued. There are stocks which have an inherent strength based on a price to book, because of which is low and high ROE. They need to look at what is the asset quality, what is the focus areas for the bank going forward. Is technology, is the bank technologically savvy and investing in technology, which is definitely going to change the way banking is going to be done. So it's one has to look at all these factors and then take a call of what is the right stock to invest in.
Okay, and Sanjay, normally I would have asked you what is that stock to invest in, but I know you're going to disappoint us. You're not naming any stocks. But any words then for the retail investors? what do they do once they finish watching this show?
So, you mentioned that over its history, the BankX has delivered a 14% return. But I think if you dissect that 14%, you will find that, there are some banks which have given 400% and there are those which have given minus 20, 30, 40% also. So I think therein lies the story that if you have to invest in the bank, first of all, should you be investing in banking stocks at all? I think the answer is a resounding yes. Take maybe 2, 3, 4 banks, just don't buy them on their valuations alone. Buy them for the differentiated strategy that they give you and whether you believe that that strategy will be the winning strategy.
Yeah, so reading between the lines was never as important as now, right? Gentlemen, thank you so much for your time and thanks very much for coming down and for sharing your knowledge with all our investors. Mridul, Sanjay, always a pleasure speaking to you.
Thank you so much.
All right, and that brings us to the end of this show. Stay tuned as we continue on our quest to decode and analyze so that you can invest wisely. Until next time, thanks for watching.